Well, hello traders and welcome to this video. I'll be taking you through how I'll be approaching markets come next week. That is starting on 24th to 20th June. I'll also take you through some price action ideas just for your learning purposes. We start off with the dollar Swiss. As you can see, I'm on the daily chart. I would like to start with the weekly chart just to give you a bit of context on the price action. As you can see, price is in a long-term range, has been ranging since about 2023. Yeah, this downtrend, and we are caught up in this large range. And in this large range, we are seeing resistance coming around the 9140 to the 9200 region. As you can see, we're to see a weekly body close above the 9140 region. So that's a significant area of resistance. We did see support coming through around the 8550. We saw this false break scenario, and I think I took you through this trade idea. Just to narrow down to the daily, you can see what happened around the 9150. Price did close. This is a bullish signal, and I wouldn't blame you to take this if you took this trade, but you'll have been wary of these highs around the 9200 region. As you can see, price closed back below the 9140 region, 9150 region, and to me this was a false break. A false break because price failed to, find support around this level. Because ideally, if you are breaking out in line with an existing trend, you would expect a recently broken level to actually hold a support, but that did not happen, and you did see price actually close below and actually take out some of these highs around here. Yeah, there's a support resistance region. As you can see, price took it out, and to me there was a change of structure, and I did call for a short once price was retracing back to that level. Yeah, and there's a video on my channel. I'll pin it just as a card for you to go and revisit it. And I did put my stop loss around the 66 region. It was around 91.66, and my take profit one was around this you see this week rejection and the second week rejection. So my take profit one was around the 0.9 region, and it got hit. Then price went on, was about to hit my 91.66, which was my stop loss, but it didn't hit, and it actually rallied down since. Yeah, if my stop loss had been hit, I wouldn't have been worried, because remember my TP1 was hit. So net this would have been a break-even trade. But given how price action panned out, I actually made some pips from this trade. As you can see, I did target the next key area on my chart. That's how I trade. I target the next key area on my chart. Look at the order flow, bearish, sideways. So we've hit a level, and I'd like to go back to the weekly just to show you the importance of this particular level. You see the rectangle there, the second rectangle highlighted. The support region was in between the 88.84 and 88.37. I like to draw support and resistance as zones, and my zone is usually identified by the wick and the highest body. As you can see, that was a zone, and you can see from the weekly chart we did react. Look at that wick. Yeah, look at this. Just to make it clear for you, look at this. Can you see that wick rejection? That area was significant. Following week, the body was within this wick, failed to close below this level, so not a signal to go short. And you can see this past week we did see a bullish reaction. Price did try to break that zone, and you can see the much momentum that bears lost. Ideally, if you see a week like this and actually closed bullishly, it means price opened here. At one point this was a bear bar, but look at how much momentum bears lost and how much momentum bulls gain to actually even go back and close this candle bullishly, make it a green candle. So for next week, my bias is bullish, just because of the price action that is happening around here. And I want you to see something. Yeah, look at the swings. Look at this swing. Look at how long this swing was. Look at how short this swing was. And I think I've mentioned before that you can actually tell divergence before even putting your MACD on the chart. This is a divergence, and just to prove that, I want to put a MACD on this chart just to show you that divergence. Yeah, there we have the MACD. Look at that swing, went down. Look at this swing, shorter swing than the previous swing, usually indicates a divergence and probably a change of structure that is up and coming. As you can see, we did see a divergence. Take a trend line there, divergence there. What do I mean by divergence? The market has printed a lower low, but look at the MACD, high low, sorry. That's enough evidence that a divergence is on the chart, and you actually don't need to put the MACD on your chart for you to see the divergence. And just as a recap, once you see price forming shorter swings, just know that's a divergence that is coming. You can see the reaction in the daily. Price tested the region, indecision, then look at this bullish bar. One bull bar completely took out 2 days of trading, and this to me is enough signal that for the coming week will be bullish. And even if you look at the DXY, remember the chart clearly, it's actually bullish. Yeah. So just from a correlation point of view, we are bullish on the dollar. So it would be important to actually put a buy just right at the top of this zone. I like that's the best entry. Your best entry will be in the top of this zone. If you want an entry that will give you a higher R, you can put your entry within the zone, but I prefer just the safest entry. And my stop loss is usually placed where my signal will be negated. Ideally, if price comes and close below this low, then ideally my bullish idea is negated. So that's why I put my stop loss and I target the next key area on your chart, which is that rectangle highlighted above, as you can see. With a take profit of 1.93, remember trading is a marathon, yeah. And this is the closest area I could actually target, since it's closer to the current price action. And if we see a retracement to this level around 88.84, I'll put in a limit buy, a buy limit around this area, targeting the next area around 0.9, which is actually a big figure and an area where we saw these weak rejections and actually forms the next key area. So ideally, how will I trade these? I'll put 2 trades. I risk either 2% or 1.5% or 0 or 1%, depending on how I feel about the price. For this one, I'll risk 1.5%. I'll split it into 2. The first trade will be a the first trade 0.75%. I'll risk 1:1. Then the other trade I'll let it run to target. So if I get my 1:1, ideally, whatever trades that I'm remaining with, in as far as the dollar Swiss is concerned, then I just it's a no loss trade. If it hits my stop loss, I get out of break even. I can decide even to close one trade, the 1:1, and move the other trade to break even. Now I have risk-free trade, and that's how I manage my risk in the markets. But overall, I'm looking for a bullish move towards that level. I'll ideally also be keenly looking at this body high around 89.73, probably as my first take profit, but I'll decide on this later on. But just basic idea around how I'll be approaching the dollar Swiss. I'll be bullish, targeting the next area around 0.9. But if we do close below this level around 88.37, then I'll be bearish and I'll target the next key area on my chart that you see, which is 87.27. Because I'm a swing trader, then ideally I can also take a second trade and let it go to the next key support zone around 85.50, as we saw from the weekly chart. The next chart is USD yen. Clearly bullish. It has been bullish for years, actually. I think since we broke out of rectangle pattern around, what was it, 2020? When was this? Around 21. You can see these triangle pattern. Yeah, this is a bullish idea. It was driven by fundamentals. The dollar was getting strong, of course, and the negative rates at the Japan was still holding for a while. We did get the breakout and price has been bullish since. We did see the Bank of Japan intervention, but didn't change the trend. Price retraced the highs, as you can see, and we are bullish. I believe this is an intervention. I'm not sure if it was publicly declared by the Bank of Japan, but this is an intervention. But as you can see, price is still bullish. The bulls are still adamant, yeah. So this one will be bullish until I see these trend reverse. Ideally, I'll be looking at a retracement towards either 158.33, which is a body high swing. As you can see, I marked the body, the highest body, but I know price might face a bit of resistance around the 160.27, which is the highest high, as you can see, being the week of these candle. So it'll be interesting to see how price action pans out, but I'm bullish, waiting for bullish patterns. Either a retracements towards this area around 58.39, but you might actually see a deeper retracement given this last swing. Yeah, So be careful when you're placing your stop loss. Ideally, your stop loss should be below 157.59, slightly below that swing. So you can have your entry around here, or you can go for a deeper entry around here, but your stop loss has to be below here. Yeah, this level. Stop loss just has to be below this level, and for this one, you can actually decide to hold for a while. I mean, it can form a good position trade given the chart and the fact that the trend has been here for a while, and the fact that it's trending nicely. I always say, like, trends that flow well from the, if it's a bullish trend, at least from the right side, from the left side of the chart to the right side of the chart. Ideally, you want to see a 45-degree trend. Yeah, you don't want to see parabolic moves. Yeah, and this is a nice trend. Watch out for any bullish patterns above that broken level. The next chart is the gold trade. The gold chart. And for this one, I want to take you through a concept that I've taught you before in this channel. It's all about liquidity concepts and the anatomy of a price swing. I'll also link the video to that lesson. Make sure you watch it. I gave an example of a euro-dollar trade, and don't you see that this pattern repeated itself exactly? What you see was, and just to start off from the daily to give you context, the trend is a range. Clearly, price is not making high highs or higher lows. As you can see, swing, price is not making new levels, just in a range. Confirm even by the moving average. As you can see, moving average is sideways. But you did see this candle. I mean, this candle is, look at the order flow that went into pushing this candle to close bearishly, yeah? Look at the body of that candle. Look at the short wicks. Look at the range. It's highly, when you see such patterns in your chart, there's a high chance that price will actually retrace to a breakout level, yeah? Just to seek liquidity before it actually continues in its initial trend. So I wouldn't advise you to chase for such patterns, but how I usually trade them is scale down to a lower chart like the H4, just to see it deeply, to see the price action patterns that are forming. Like for this one, I'd ideally wait for it to turn bullish and see patterns of bullish breakouts, and I did get one. As you can see, when this candle closed, this candle is a H4, I did place an entry around the level. The next candle was bearish, scared me. I thought I was going to be stopped out, but my stop loss was just right below this swing. You can see the last swing point before the breakout there. That's where my stop loss was. So I had a stop loss there. Entry was around here, and my target was around there. Just to give you the risk reward metrics, that's how it looked like. Yeah. There. I usually leave a few pips just before my level is touched, just for the spread. Yeah, so I usually don't target the level exactly. So I did have my TP slightly below the level, and as you can see, this was a two-hour trade. The first trade, TP1, was hit. My TP1 is usually 1:1, and ultimately my take profit was actually hit because I anticipated price will actually move to this breakout area. As you can see here, see that zone, breakout area. Left, such moves usually leave liquidity voids, which ideally I'll fill, and price will usually retrace to the point of release, being that where there's a break, where you see a consolidation of bars, then a break, price usually has a tendency of actually retracing back and just filling those voids before it continues on its way down. And to give you more context, I want to look at the EURUSD chart. Similar trade that I took few weeks ago. Do you see it? Do you see the same? Look at this release, price action reversals. Yeah, you see, same ideas, and such patterns will always repeat themselves in the forex market. May not be often, but when you see them, please take them, especially when they occur on the higher time frames. They'll actually have the opportunity to give you nice R trades. So ideally, you'd wait for a price change of structure. Change of structure, I mean we are going down. So I want to see price form new highs. This was a high, it was taken out. This is a new high. Then ideally, I want to see this new high taken out. That to me is a confirmation that we are bullish. This candle, as you can see, this candle here took out this high and a retracement, and ideally usually put your stop loss at the lowest low. You need to identify your low prior to the breakout. The lowest low was around here. And just to put, sometimes you can have a line chart just to give you context. Sometimes the low can be shorter, sometimes it can be higher. As you can see, a significant low prior to the breakout was actually lower than where I've placed it. Yeah, it's here. You see this low, this movement. Where did that breakout move start? So ideally, that's where you put your stop loss. And if you took that trade, at some point you'll have scared you. Yeah, at some point you'll have been a bit scared. Of course, you target the point of release, being where you see this consolidation of candles. Yeah, that's where you target. This was a 2.7 hour trade. Let us look at it. It was eventually hit. If you had a tight stop loss and you were taken out, there's still another opportunity to actually take this nice long trade. And that came in here. You see, the swing point was taken out. Price retest. Price is only going for one region, and that region is simply that breakout. Yeah, just to delete everything and go to the daily chart. Same way I did with the gold trade, just to show you that we also had the same bar. You see, the same bar we saw on the gold chart, on the daily chart. We are seeing the same patterns, and a daily price retraced to a broken to the breakout level and actually continues in its initial trend. If you took your 1:1 and move to break even and let the trade just run to TP, you'll have made a 1:1. Assuming you're risking 2%, the first trade you'll have made 1% return, and the other one 2.7% return. So overall, you'll have gotten 3.7 R from this one trade. If you risk the entire 2% on just one single move, you'll have made slightly above 5 R. I did take a trade during the week on the euro dollar. That's why you see this risk reward tool over here, but I was stopped out. I didn't place a correct stop. As you can see, we did have this consolidation of bars. Price clearly broke out, so I was expecting price will actually retrace to that level. As you can see, this is a swing point. Yeah, this was a swing point. I love such breakouts. For me, the ideal breakout is where you find just prior to a breakout, there's a consolidation, then you have one bar clearly taking your outer level, and the best trade is where you find more than 50% of that bar is below the level. So I did see a retracement, but I did put a tight stop. I think there was a news event, if I'm not wrong, that led to my stop out. I can't remember exactly what the news was, but I was stopped out. But as you can see, my initial trade idea was correct. We did see a continuation of my initial idea. Yeah. So whenever you do your trade reviews, always review your entries, your stops, just to see did I put a tight stop. For this one, if I put the ATR, I will have made up my 1:1, and I will still be in the trade waiting for my take profit to be hit. But for this week, I do not see a trade idea around the euro dollar. But we never know. Let's see. Remember, this analysis is as of today, so we don't know how the market will pan out when the week starts. But ideally, if this bear move is to continue, we'll ideally see a movement towards some of these key swing points around 1.06. A key swing point is an area that led to a major price move. As you can see, this is a key swing point, started here, led to this move. Price failed to even close above it. This swing point here led to this bullish move. So ideally, price will ideally be moving here, at least over the medium term. Next chart is pound. I do not see any particular trade of the pound, but you can see the correlations with the euro dollar. But I'll be looking at this swing point around 1.2630. So far it's holding. As you can see, there's evidence that it's holding. I mean, look at those wicks. Look at those wicks. So there's a possibility that this level might actually be significant. I just do not see a good trade idea, because ideally this zone looks too wide for me to even think of using it as a support area. So for this one, I'll pass until I get clear price action. What you're seeing is an index. This is the NASDAQ. Clearly bullish. Clearly bullish. So I'm expecting a retracement. As you can see, price was trending nicely. It got almost vertical. Then we did see some sort of a slowdown, sluggishness from the bulls. The bears have come in. So price is probably pausing. So this one I'm bullish. And I'll be targeting zones identified on the higher time frame. We'll go to the weekly. We do have a key swing point coming in around the 18. See that 18,465? The figures might be different depending on your broker. Because I know for indices, the price is actually a bit, they're slightly different. But for the NASDAQ and other indices like the S&P, I'll be looking for retracements towards some of these key swing points that you're seeing highlighted here. These are nice key swing points because they offer the best buy areas. Yeah, unless a swing point is clearly defined, I wouldn't encourage you to trade. Unless you're doing for short-term scalping, day trading, yeah, you can always do that. But for me, since I look for those large swings, I really like to target retracements or breakouts from key swings. Because if you're trading the H4, this will ideally have been a point in time where the market paused. So if you took this as a short-term trade, it wouldn't have worked out given how it retraced. But I know if I want to see if I can go back to time to see if I can give a clear example. Sadly, do not see a clear example, but what I mean is always target the key swing points identified on the daily. As you can see, this key swing point led to this move, so I marked it, and it's actually also seen on the weekly, and you can see price retraced to it on the daily and led to that move. Yeah, so price did form another swing point here, as you can see clearly on the daily. So that's what I'll be targeting. Yeah, and in the meantime, for short-term trading, since I'm targeting this zone for buy trade, I can actually be looking for short trades towards that level, depending on how price behaves on the lower chart. My lower chart is usually the H4. So ideally on the H4, I'd want to see a complete change of structure. A complete change of structure means, like for this one, we are going up, we are bullish. So ideally, I want to see price form a lower high and a lower low. Then price break that lower low. That will confirm to me that the market is willing to form new lower lows and it's actually trending downwards. And that will give me enough confidence to actually short. So that's how I usually trade my change of structures. So just to recap, NASDAQ, I'm bullish, just waiting for retracement to those key levels that I've showed you on the weekly and the daily. And the same applies for the S&P. As you can see on the H4, you can actually take this trade for short-term trading, because this is a level that price had stalled around before it actually broke above to form new highs. So if you're trading the 5 minute, the 1 minute, you can actually look for bullish price action patterns around here and target a 5 pip or a 10 pip movement, and it will actually give you something. But now if you see, if we zoom out to the daily, it doesn't look like a swing point that will give you confidence to take a long trade and hold for weeks or days. Yeah, but if you look at the lower time frames, so that's why if a swing point is not clearly defined on the daily, then a daily just use it for short-term trading. Yeah, otherwise a long run you'll be net loser. But you see, these ones are clearly defined, these areas are clearly defined. So I know when price hits these levels, and just to scale up to the weekly, if price hits this swing point, I know there's a high chance we'll see a continuation and actually see even a bigger move like this. Yeah, because this is a weekly scale, this is a daily scale, means price took quite a while. I mean, this is a very significant level compared to this swing point here. So if you're trading these minor swing points, you can use them from short-term day trading or scalping. Then you can use these major swing points now for swing trading. So that's how I'll be trading the S&P, similar to the NASDAQ. I'm just waiting for retracements. British pound, same as USDN. We are bullish. We are seeing breakouts to the upside. So ideally, if USDN is bullish, you'd expect other yen pairs to be bullish. So ideally, what I usually do is I scroll down to the yen pairs, just an example, and see which one is giving me a good breakout pattern. Then I trade that. You don't necessarily have to trade the USDN. If it's bullish, you can actually scroll down to other yen charts and see which one is giving me a clearer pattern in terms of levels and risk reward. And this one looks clear. That is the British pound, as you can see. Because remember the USDN, we had an issue with the range of support and resistance. It's not clear how price will react to the highest high, but we'll be looking out and see how it will react. But for the pound yen, as you can see, we have this high around 200.5, 200.50. Led to this weak rejection. We saw this body rejection creating a swing point. A weak swing point, you don't see a continuation to the downside. Price retest again. We failed to see a lower low. So clearly, bulls are strong and are willing to buy this pair at high prices, and eventually we did see a breakout, of course in line with what's happening on the daily. So this one I'd say I'm bullish. I'll be targeting, at least on the HY, I can target some of these recently broken highs. Have a stop just below this swing low. I can have it below the weak low or the body low, depending on how far we are from price. Then, of course, take two trades. The first one, target 1:1, then leave the other one just to, to trade up. Because ideally, this market has been an upside for quite a while, yeah? As you can see on the daily, even as far back as March 2023, we're bullish. So if I take my first trade, even if I'm risking 1% and it gives me my 1% back at 1:1, then take the other 1% and let it ride the trend. On the long run, you'll be successful. Another yen pair, this is the Aussie yen. You can see the same chart patterns and as I was saying, look for patterns that are clearly defined. As you can see, the Aussie yen clearly defined breakouts, and this one, I actually favor this to the pound yen, just given how clean this structure is. But it's really the same idea. I think we are done. Basically, that's a recap of what I'll be looking out for the coming week. I do have something with the pound Swiss, but it's not really clear, so that one I'm not going to deep dive into it today. But just as a recap, I have my USD Swiss bullish, just targeting the next key area. The yen pairs bullish. As you can see, the USD yen, I don't like that chart look. But if you look at the other yen related pairs, the breakouts look nice and cleaner. So that's what I might actually be trading for the coming week. And of course, the indices, your S&P 500, your NASDAQ, all bullish, yeah? And probably maybe retracing come this week. So probably trade this first swing point, target remove back to this swing point. But if we actually retrace to the major swing point, I probably now take a longer swing trade or position trade, yeah? It depends on the levels that are tested, and the same will apply to the NASDAQ and all other indices. For the goal of taking you through the anatomy of a price swing, just to show you the similarity to my liquidity concept video. As you can see in the liquidity concept video, I used EURUSD. Same chart pattern has repeated itself on the gold. And with that, I wish you a successful week. If you feel my content is of value, please subscribe and invite your friends. May you catch some pips this week. All the best.